Hello everyone, and welcome back to another weekly market update from Xylostar.
Global markets rose this week on AI optimism and easing inflation, while investors are tracking Middle East tensions amid hopes for progress in US-Iran peace talks.
Indeed, especially after the historical launch of SpaceX IPO. We also got the interest rates to increase on the euro to fight inflation. However, finally oil prices began to ease. Gold fell to the level of 4,000 exactly as anticipated in the previous week. Does this mean this is the beginning of a prosperity era? Let's see how that's looking on charts. Alright everyone, here we are kicking off our weekly market outlook. Now, what I'm going to be sharing this week might be very critical for a period to come, so pay some attention. Starting with Nasdaq, we can clearly see that Nasdaq spiked up in price, and that's actually majorly due to the historical anticipated IPO of SpaceX. And we can see a lot of technical factors speaking to us that the price is most likely to continue to the upside, and I would favorably look at, it's not a financial advice, but the level of 30,000 as the next target. I don't want to be, it might go further than that, but I don't want to be optimistic about that basically US 100 and the AI situation. I've also been highlighting that AI is at its highest when it comes to the weekly time frame trend. And I've also highlighted that the AI might be in a bubble situation right now because all these AI related companies are collecting capitals by other AI companies, investing in other AI companies, then taking, it's a long story. In short, they're taking capital, but we still are not in that production phase. So perhaps there is a decent portion of these companies that they will fail to deliver expectations, and that might cause us a huge crash on financial markets, right? Technically, it is very possible because US 100 should make a huge correction to the downside. Speaking of technical factors, as I've highlighted in the past 2 weeks. Now, if we go to the fundamental part, we can see that the IPO valuation of SpaceX was $2 trillion. If we look at a company like Amazon, it has a market valuation of $2.8 trillion and it has generated roughly $742 billion in profit last year. Compare that to the profit that SpaceX made, it was approximately $18.7 billion only. Now, if we look about how huge the valuations are, we speak about $2 trillion for SpaceX and $2.8 trillion for Amazon. Amazon had made roughly a huge amount of profit. We're speaking about $742 billion, while SpaceX made only 18.7. Now, keep in mind that the investment in the stock is actually because these investors are betting on Starlink, on global communications, on defense contract, and also satellite internet dominance. Now, we have to keep in mind that investors are having huge expectations to come from SpaceX. Now, speaking of the revenue of SpaceX, it is actually very poor compared to the valuation. So, what happens in the case of SpaceX failing to deliver these expectations? We will have the pop of that bubble because of the huge valuation of SpaceX. It might lead the crash coming on US 100. All right, so it's a very, very, very possible outcome to happen. So be very cautious about you investing in US 100 and even in SpaceX. This is personal analytical view. It's not a financial advice, but I would always recommend it to be very cautious because the best investment you can do is a safe investment with good environmental ingredients, if that's good as an expression. Hope you guys get me. So be cautious about that. However, currently it is still bullish on US 100. Now, This retracement is not likely to happen. We might see a continuation to the upside if not much happens during the weekend, because the sentiment overall is very bullish currently, but be cautious trading it. Going to gold, as I had highlighted for you guys, we can see that the price fell to approximately 4,020.25 depending on the broker you're trading. And this is exactly what has been anticipated. What have I told you? All right, hope you guys made some good trades shorting gold. All right, now speaking about gold, 4,000 is a very strong demand. And now looking at the fundamental factors, oil prices started to go down. Peace talks are now more than ever to happen. And personally, as I've been speaking in market updates in multiple weeks before, if war was actually the goal, we would have seen bigger entities putting more money in gold to fear the outcome of war. However, it was just a geopolitics to control prices and inflation. Now, keep in mind also that central banks of the countries that are aligned in BRICS Union, they also want to buy gold. So this is an attractive price to buy gold at, and we can see a spike in price from that demand zone. One more thing is inflation, as in CPI reports, came as expected and some came below than expected, which means the Feds are having good control of inflation regardless the higher prices of consumed items, which means that we might see no change in interest rates or no increase in interest rate on a shorter period of time, which means gold is more likely to continue going up, right? So I'm not going to pop up the chart now, but if you guys remember the chart I've showed you in the previous week, it is at demand zone trend lines. We can expect the price to go up from here. Next shorter term target is 4,330. Speaking about this resistance here, and probably market will even continue going up, retracing to 4,400 and possibly even continue in a bullish movement to the upside. All right, so a movement to the downside on gold is not as likely. Right? Be very cautious at trading it, because we are at a critical situation which could be a historical story to be told about financial markets. Speaking about the AI bubble, if it pops up, it means gold should skyrocket. All right, so this is about gold. Now going to Euro USD. Now, since the inflation is slightly less than anticipated, or let's say not the inflation, let's say the CPI report slightly less than anticipated, interest rates has been increased on the euro. So we can see also more bullish sentiment on Euro USD for the upcoming week to come, and we can expect the price to go up to about 1.16, let's say 200s for a beginning target for the upward movement, and probably it is going to continue even further up to about 1.17. So this is about Euro USD. Going to Bitcoin. Bitcoin, even though it fell to 59, I kept telling you guys 60,000, 62,000 is a historical price to buy and invest in Bitcoin, in my opinion. We can see that Bitcoin is forming an ascending triangle for us at a very strong demand level. Also, if we keep in mind, and along these technical factors, I would also like to highlight that Standard Chartered Bank had stated that Bitcoin now might be at the beginning of its down movement. For reasons, you guys can have your own time reading those articles, so I don't lengthen the video. So a fall to 60,000 again is not likely. It might happen, but technically we should see actually a movement to the upside minimally to about 68,500. So this is about Bitcoin. Going into Nifty 50, as also anticipated in the previous week, we can see we expected a movement to this trend line, and this is exactly what happened in this downtrend. Now, because of the spike upwards in movement, because of the decreasing prices of oil, because of peace talks of the non-existing war are at their final stages, hopefully, which means things should go back in order when it comes to business and shippings, etc., which means exporting shall become easier because of the reduced oil prices, and hopefully oil prices are going to fall. We have a lot of technical reasons for that, and also the fundamentals are speaking of such. So I'm also bearish on oil prices, not a financial advice, of course. And because of that spike, we can expect actually a continuation to the upside on Nifty 50 rather than a movement to the downside in this downtrend here, right? So we could target this resistance level here, or this supply, between 24,300 to 24,500 as in the upcoming move, which probably is going to take a fortnight. All right, guys, this will be it for the technical side, also fundamentals. But now I'm going to be shifting the mic to Mr. Medium from London to give you more insights about what happened and what might happen, and hoping for you guys to have a great trading week ahead. Mr. Medium.
Thank you, Samir, for sharing your insightful analysis. Here is Amir Amidian, Master of Finance and Investments in the UK, and also financial market analyst at Xylostar. Last week, rumors were talking about the high probability of having a deal, or let's say final deal, between Iran and the US, and also copper earnings in the US was disappointing, and eventually the CPI is still accelerating. Let's have a look. Greetings everyone, welcome back from the weekly market update hosted by Xylostar. Last week financial markets was packed due to so many different information, such as central bank decision for the latest interest rates, and also economic indicators, geopolitics, and also corporate earnings. Let's have a look. I want to kick this session with the central banks. The Bank of Canada kept the interest rate unchanged at 2.25% due to the ongoing global economic risks. Canada's economy contracted by 0.1% in the first quarter of 2026 as housing, investment, and exports weakened. Worth mentioning also, unemployment remains elevated at 6.6%, while consumer spending stayed relatively strong. Now, next is the European Central Bank, or ECB. The ECB raised the interest rates to keep the inflation near to the 2% target of the long term. The inflation is still expected to stay elevated, while economic growth outlook was cut. The ECB says it will stay flexible and adjust policy based on the upcoming data. In the United Kingdom, the UK economy remained strong overall, while GDP growing by 0.7% over the 3 months to April 2026, supported by solid growth in services and construction. Construction was the strongest sector, rising 1.6% in this 3 month period time, while production activity slightly declined. However, in April alone, GDP fell 0.1%, mainly because the services sector weakened after previous monthly gains. Now let's jump to the United States. In the United States, the US inflation picked up in May, with both consumer and producer prices moving higher again. The rise was mainly driven by higher energy and good costs, with food and housing also adding pressures. Overall, it suggests inflation is still sticky, as higher business costs could feed through to consumers. From the geopolitical side, President Donald Trump reposted a statement by Iranian Foreign Ministry Abbas Araghchi on Truth Social, signaling that a US-Iran agreement is getting closer. The move boosted the market sentiment, with investors becoming more hopeful about the possible final deal between these two parties. The last chapter of the last week was about the corporate earnings in the United States, as Oracle and Adobe released their corporate earnings. Oracle reported very strong earnings helped by rapid growth in its cloud and AI business. And also, from the other hand, Adobe also delivered better than expected results and increased its outlook for the rest of the year. However, both stocks came under the pressure as investors worried about the Oracle's high spending and Adobe's management changes. Now, let's have a look to the upcoming week. Next week, we expect financial markets to be super volatile, as 5 central banks are going to release their latest statement and the interest rate decision for their economy. Initially, at the beginning of the week, Bank of Japan on 16th of June, later Reserve Bank of Australia, and also at the middle of the week, Wednesday, 17th of June, the Federal Reserve is going to release their latest statement for the interest rate decision, and financial markets expect the rate to be unchanged. And also on 18th of June, Thursday, SNB or Switzerland National Bank plus the MPC or Monetary Policy Committee of the Bank of England also are going to release their latest statement for their economy. Stay tuned with Xylostar, and don't forget, next week is going to be super volatile, and control and manage your risk. See you later.
If you have a question about a certain asset, feel free to leave it in the comment section. We'll get back to you upon it.
Don't forget to like, share, and subscribe.